Hi everybody, this is Alan Ellman, the Blue Collar Investor, here today to discuss with you the BCI system and the factors that make this a system that so many of you have had success with over the last few years. You have heard me say time and time again that blue collar investors base their investment decisions on sound, fundamental, and technical principles and then use a whole lot of common sense. So let's make those factors come to life today and to discuss what they are. Now, we all go to the first pool of stocks from the IBD 100 list. Now, those stocks are screened, and they're screened in a lot of different categories. First, the Smart Select Composite screen, and we'll discuss that in just a few moments. It also has an earnings per share rating, which shows the profit growth of the company, a fundamental principle. Next, the relative strength rating, which shows the price strength of a stock, a technical rating. It also projects the earnings per share percent change over not only the next quarter, but over the next year as well. And it shows last quarter's sales percent change. So you see a sprinkling of both fundamental and technical principles in the IBD 100 screen, and there's actually more. It shows return on equity, which shows the monetary efficiency of a company. Pre-tax margin, which is the difference between the sales price and the cost of producing that particular product. Management percent of stock ownership. The higher, the more confidence management has in its own company. And it also shows sponsorship rating. And you'll have a higher rating for a stock in this category if it's owned by the better performing mutual funds. And you could see how impressive these screens are and the reasons why the IBD 100 over the last several years has consistently beat the S&P 500. But we're not done. We take these stocks that are optionable and we run them through the Smart Select ratings, which is found on the IBD website, and we require 6 green circles. In other words, in all 6 categories. And those categories consist of the composite rating, which is a combination of fundamental and technical principles, earnings per share, which again is the earnings growth, relative strength rating, which is the price performance over a 12-month period. It also has group relative strength rating, which shows the strength of that stock's particular industry. Now, the SMR rating stands for sales growth, the M stands for margins or profit margins, and the R is return on equity, fundamental principles. In addition to that, we have the accumulation distribution rating, which shows institutional buying and selling. And we require all of these ratings to be in the top or green category. We're not done. We then run our stocks through MSN Scouter rating, which is a rating based on a combination of fundamental and technical qualities, historical qualities that have shown the success of stocks. What qualities will make a stock appreciate in value? And it's based on actually 10 years of historical data. If a stock goes up, but goes up in a very volatile manner, it will not have as high a rating than a stock that goes up in a much calmer manner. So therefore, this is a great risk-reward profile. All right, the higher the rating, the less volatile the stock, and that's very important to us as covered call writers. Once the stocks have survived those screens, we then do a technical analysis, or we look at the chart pattern of the stock. And once again, we factor in several different parameters. We look at the moving averages, which identifies trends. It also will recognize support and resistance. Remember, we want those price bars to be at or above the 20-day exponential moving average, and we'd like to see the 20-day EMA rising. We look at MACD, which is both a trend and a momentum indicator, and the parameter that gives the most predictive quality. Oftentimes you'll see a change in the MACD histogram prior to a change in the movement of the stock in relationship to its moving average. We look at the stochastic oscillator, which shows the battle of the bulls and the bears. This is another momentum indicator. And finally, we look at volume. Any change in any of the other technical parameters is more significant on higher volume. If we see a MACD dropping below zero and extremely weak volume, it's less significant than had it happened on very strong volume. Now we factor in our common sense. This is what makes us all blue-collar investors. We avoid earnings reports and same-store monthly retail sales reports. Too risky for us. We'll pass on those. We have a volume requirement of 250,000 shares per day traded. Shares trading less than that are easily manipulated. We'll pass on those. No thank you. Some more common sense. Strike selection. Many people will just write calls slightly out of the money. Doesn't make any sense in certain situations. We look at the strength of the technical pattern of the stock. We factor in the market tone. And then we make a decision. We might be better off going with in-the-money strikes, not just out-of-the-money strikes. Or we may choose to ladder our strikes, some of each. Higher percentage based on the market conditions and the technical pattern of the stock. All common sense. Well, we're not finished with the common sense, folks. We factor in industry or sector diversification. We're not going to put all our eggs in one basket. How about financial allocation? If a stock is $100 a share and another one is $20 a share, we don't buy the same number of shares of those stocks because we'd be much more heavily weighted with the more expensive stock. We put an equal amount of cash into each stock, thereby reducing our risk. We look at industry rank. Stocks that are in industries that are performing much better are more likely to hold their value or go up in value. Just common sense. And we factor in beta considerations as well. Stocks with very high beta would do us much better in uptrending stronger markets. And if it's a slightly down market or a volatile market, we may opt for lower beta stocks. And finally, compounding. When we sell an option, for most brokerages, that cash is available the next day for trading. Take that money, reinvest it, and compound your money instantly. Compounding, folks, is the eighth wonder of the world. Now, if a stock misbehaves, we must be prepared to institute our exit strategies. Think ahead. What if my stock goes down? What am I going to do? And that's really what blue-collar investors are all about. We have all the same characteristics. We're fundamentally sound. We're technically sound. Our decisions are all non-emotional. We all want to be CEOs of our own money. And we all want to be a path to financial independence. I hope you've enjoyed this video. For more information, visit my website at thebluecollarinvestor.com or write me directly at alan@thebluecollarinvestor.com. Or right from my website, you can hit a link that will show you a premium membership page, which has a lot of information, very good information. Visit, check it out. So thanks for listening, and happy investing, and much success to you all. Take care, everybody.